Welcome back, VITA volunteers. Up to this point, we've been learning about some of the basic things we need to prepare a return, like filing status and dependency determination. And we've talked about various forms of income and some adjustments to income, which are some expenses that can lower income. All the things that we needed to get to the adjusted gross income line, or the AGI, which is a really important number because it helps us determine the eligibility of our taxpayers for certain tax benefits, which we'll talk about in future lessons. But for this lesson, we are moving down the 1040 into the deduction territory, where we are able to continue lowering the amount of income subject to tax until we reach the taxable income line at the end of page 1 of the 1040. Then we are going to move on to page 2 of the 1040 and talk briefly about the tax computation, which is the first line of that page 2.
So after we reach our adjusted gross income line, we have a kind of a split in the flow of how a return is going to go. And some people are going to be able to deduct the standard deduction, and some people are going to find that they get a better tax deal if they itemize their deductions.
And here's what it looks like on the front face of the 1040. Line 12 is for the standard deduction or itemized deductions, which flow from Schedule A. It's important to recognize and be able to communicate to our clients that this is an either-or decision. They will either take the standard deduction or they will take the itemized deductions. And we will help them take the deduction that is most beneficial for their circumstances. In this lesson, though, we will be focusing on the standard deduction. We will briefly touch on some common types of expenses that can be used for itemized deductions so that we all can recognize a situation where a taxpayer might find itemizing more beneficial. But another lesson in the training for the advanced certification will cover the itemized deductions topic in more detail, since volunteers must have advanced certification to prepare those returns. The main circumstances that will determine the amount of the standard deduction are filing status, age, and blindness. And if you'll remember way back to our filing basics lesson where we discussed who is required to file a return, we talked about filing thresholds and how things like filing status, age, and blindness changed that threshold number. Well, now we are going to see some familiar numbers because the filing threshold in many cases is the same as the standard deduction. Now, you won't need to manually calculate the standard deduction. TAXSLAYER does the heavy lifting for us if we've correctly filled out the basic information in the input screens, and we've also picked the correct filing status. But it is important to be familiar with the base numbers and the situations that can cause the standard deduction to be a little different than the base amount, so that when you go back to check the return for accuracy and explain the results to the taxpayer, you'll understand how the number was calculated. This chart shows those base amounts attached to the different filing statuses. Then, for each circumstance that applies to our taxpayer and the spouse, if they're married filing jointly, the addition to that base amount. Once the base amount and all the additions for age and blindness are added together, that's when we come to the correct standard deduction. Dependents are another group of taxpayers that could have a standard deduction that is different from the usual base amounts. And again, TAXSLAYER will calculate this if you've correctly entered the taxpayer as a dependent in the basic information input screen. But if you look at that standard deduction and think, that looks really low, it might be because a dependent standard deduction will be their earned income plus $400 for 2022 returns, if their income is below the base amounts. However, if their earned income is below $750, their standard deduction will be $1,150. This means that for dependents, their unearned income will be more likely to be subject to tax than their earned income. Publication 4012, tab F, has the worksheet here that I'm showing here that has the calculations, and TAXSLAYER should generate this in the print set for the applicable returns. As mentioned earlier, we do need to at least be familiar enough to recognize our taxpayers who might get a better benefit if they itemize their deductions. For those of us who will be certified at Basic, we will be making sure that we notify the site coordinator or greeter that this taxpayer needs to be matched with a volunteer that is certified at the advanced level. When the client gives you their intake form, that's Form 13614C, you will want to see if any of the boxes are checked in Question 4 of Part 4 under Expenses. This does not always mean that our taxpayer will be itemizing, but it means that we need to ask more questions. We need to determine if they have enough deductible expenses to add up to more than the standard deduction that they would get based on their filing status, age, and blindness. If they have checked medical and dental expenses, ask how much. Expenses that are less than 7.5% of their income are not deductible at all. Also, note that insurance premiums may or may not be deductible depending on whether they were already deducted from taxable income reported on their W-2. Check box 12 for code DD. Taxpayers may be able to deduct state and local taxes like sales tax or income tax, but they must choose sales tax or income tax, not both. Real estate taxes may also be deductible. It is important to note that our region of Washington State does not have the type of personal property tax that can be deducted. Clients do sometimes ask about this regarding their vehicle registration fees. If they purchased their car in the last year, they may be able to deduct the sales tax, but not the flat rate vehicle registration that they pay annually. Mortgage interest is another deductible expense, and in previous years, mortgage insurance premiums were deductible as well, but as far as this year, that's not been extended. It may be extended as we move closer to the season, but not so far. And last but not least, cash and non-cash donations may be deductible, but it is important to note that non-cash donations of more than $500 are out of scope for the entire VITA program. So when a client comes in with those boxes checked on the intake form, or they bring some sort of documentation with these types of expenses with them, it's best to do a quick calculation before starting the return. If it looks like these expenses all together will come close to the standard deduction amount and you are a Basic certified preparer, it's best to hand off the return. In many cases, however, you'll find that the amount isn't near enough to be beneficial, and you can explain to the client that they will get their best benefit by taking the standard deduction, and then you can start their return.
There are some taxpayers who are not eligible to claim the standard deduction, and there's a list in Publication 4012, tab F. But the big one for us to remember is for married filing separate taxpayers. If the other spouse is itemizing, then they are effectively forced to itemize as well. They would not be eligible to claim the standard deduction.
I'm slipping in this slide just in case we come across a taxpayer who needs to file a prior year return. So for 2021 returns, taxpayers who were taking the standard deduction were also allowed to deduct up to $600 in cash charitable contributions for married filing joint taxpayers, and up to $300 for all other filing statuses. This has expired for 2022 returns, but you'll also want to be prepared to explain that to our taxpayers, as they may be hopeful that the benefit was continued. So back to the 1040, we have our line 12 where our taxpayers will take the best benefit of the standard deduction or the itemized deductions. Line 13 is another deduction, the business income deduction, which generally is going to require advanced certification as it generally flows from Schedule C, the profit or loss from a business. But you might see an amount that populated in that line if there were Section 199A dividends that were reported on a 1099 dividend form, which we learned about in our wages, interest, and etc. Lesson. So lines 12 and 13 get added together and then they get subtracted from the gross income, which gets us to our taxable income. And that is the last line on page 1 of the 1040.
Which means we're ready to go on to page 2. And the very first line of page 2 is tax. Tax is another thing that TAXSLAYER is going to do the heavy lifting for us. But I just kind of want to make you aware of how it comes up with its calculations and kind of where the information comes from when you look at the IRS publications. So in the instructions for the 1040, and you'll probably notice our watermark again, these are from the draft publications for now. These are tax tables that if you were doing tax on paper, you would actually go into these into the instructions and look up the amount of income and figure it out with your filing status, and you would come up with your amount of tax based on your income, your taxable income from that last line on the front of the 1040.
Again, even though TAXSLAYER does these calculations, I wanted to give you a closer look at how the tax tables and calculations work. It's important to note that each filing status will have its own tax table with different tax brackets and amounts. This table is for unmarried individuals other than surviving spouses and heads of household, so it's for our taxpayers who are filing as single. You'll notice that on the right, it gives a range of incomes. These are the tax brackets. Then on the right, it gives a base amount of tax. That is the full amount of tax that would have accumulated due to any lower income tax brackets. Then we just calculate the additional tax as a percent of the taxpayer's income that is above the lower income stated in whatever tax bracket they're in. So then we just take the base plus the additional tax that was just calculated, and that will be the tax on line 16. Now this last step is a little bit simplified for some of our taxpayers with more complicated tax situations, as they may have slightly different tax due to things like capital gains. But this will apply for most of our taxpayers. And again, not to worry, TAXSLAYER does a really good job with these calculations. So on that note, we have covered our material for the standard deduction and the tax computation.